Hello everyone, welcome back to my weekend market updates. Last week, the US dollar showed real strength against the pound sterling and the Japanese yen, while gold outshined the US dollar completely. In this video, we are going to unpack what really happened, what most traders overlooked, and what I will personally be watching as we head into a fresh trading week. Let's kick things off with the GBP USD. Now, what you see on my screen is the setup we marked out prior to the beginning of last week. And one of the two major structures we identified here is the ascending trend line, which was actually holding the bullish momentum since the beginning of this month, and of course the key level highlighted at the 1.347 area. As at the time I shared the video, price action was sitting right on that ascending trend line, with the hopes that buyers will build up momentum on that one and continue the uptrend move. And we also went on to say that if price can break down that ascending trend line, then we will have no other choice to prepare for selling ideas. Now, zooming into the structure, let's look at what really happened. So, at the beginning of the week, the pound sterling rode on a perceived dollar weakness, and it rode up to about the 1.3530, but it ran out of steam, breaking 1.347 level and slicing through that ascending trend line, testing the key level around the 1.347, flipping the buyers into a downtrend. Now, behind that breakdown wasn't just about a strong dollar. Profit taking gave the US dollar an extra push, and on top of that, weak UK yields and fiscal worries weighed heavily on the pound sterling. And by Thursday's trading session, we saw some small recovery as buyers stepped back in, setting up a beautiful trading setup ahead of the incoming week. Now, in the coming week, what are my expectations? I'm expecting that the pound sterling will do a chop sideways as the market reacts to some important economic events from both calendars. Now, we have the GDP from the UK on Tuesday, as you can see here. Then we have the ADP employment, ISM manufacturing PMI on Wednesday, and that's from the United States. And of course, Friday, we have the average hourly earnings, the non-farm payroll, the Bank of England governor's speech, and the ISM services PMI. And besides that, we also have the JOLTS and initial jobless claim count, all building up to that NFP report on Friday. Now, to help me navigate this market next week, I have a simple structure here on the 4 hours time frame. And in the last 1 to 2 weeks, you can see that the price is evolving into a descending channel. So when we connected the series of lower highs, we have the resistance line of the descending channel, and the series of lower lows forms the support line of the descending channel. And if we take into account the economic events, softer US data, that is weaker job openings, lower ADP, could weaken the dollar and lift the GBP USD. And if stronger US number comes in, we'll likely see the pound sterling drag to the downside. So for me, navigating this market, I have the structure. So I have my key level at the 1.345, which will continue to support the ideas of selling or buying. So if price remains below that key level, I want to be looking out for selling ideas, then add more position if price breaks down the 1.33250. But if price action breaks out of both the trend line and that key level, then that will give me an opportunity to continue the uptrend. So to make my job easier in finding precise entries and exits, I will be leaning on this simple setup to guide my decisions. Now let's move into the USD JPY. Now this one here is still the chess game of the majors. As you will see, last week we identified a range bound where price was confined within the 148.380 and the 147.500. We had our key level at the 148.00, where I mentioned that anything above that area will be giving me buying ideas. And look at what happened. Despite the talk of Fed cuts, the US dollar stayed strong on better US data, pushing the USDJPY higher early in the week. And during the course of the second half, we saw positioning flows around the US Treasury yield, which kept the USDJPY supported and pushing price into the 149.950 area. Now, the yen, on the other hand, couldn't find any footing. Risk sentiment was calm, and the Bank of Japan stayed quiet on policy. So, by Thursday, though the rally was very strong, the rally ran out of steam, as you can see here, and price slipped into what I would call a consolidation, setting up a very interesting structure ahead of the new week. Now, looking forward, the yen will mainly react to the same US job numbers before Friday's NFP. And if the US numbers beat forecast, the USDJPY could push higher despite Fed cut expectations as the dollar regains strength. But if the job data disappoints, yen safe haven demand may kick in and drag the USDJPY to the downside. And to help me navigate this market, I also have a simple structure here after taking into account the character of price action since the beginning of this month. The first thing I noticed was this key level at the 149.150. At no time in this month as price broken out of that structure. The last time price was here was on the 3rd of September, and we saw what happened, a sharp rejection as buyers were unable to break through that structure. Now, something interesting happened last week when we saw price break out of that particular structure with an engulfing bullish candle to give us a sign that buyers may be on the verge of finding new highs. So this 149.150 here is going to be playing a significant role for me next week. As long as price remains above it, I will continue to maintain a bullish bias. Then besides that key level is this trend line. We have a trend line here, which was also broken last week. It was formerly a resistant line. In fact, you can see we have an ascending channel in place. So this area was resistant at some point, resistant here, and then we saw another resistant here before it got broken on Thursday. So is this going to be a true breakout or a false breakout? Well, we don't know, depending on what happens next week. Theoretically, we are looking at a potential retest of structure to continue the uptrend move. Now, there is another thing I forgot to mention. On the Japanese side, we've also got the Tankan survey. This is on Tuesday, Tankan Large Manufacturing Index. And of course, we also have the Bank of Japan's governor's speech coming in on Friday. Now, a stronger Tankan report or hawkish remark from the Bank of Japan could flip the script, giving yen strength and pulling the USD JPY to the downside. Now, if that is going to be the case, then anything below the 149.150 will be a sweet spot for me to look out for selling ideas. Of course, this area had been a strong selling niche in the past. So anything below the 149.150 will welcome selling ideas for me. But if price maintains above the 149.150, I will be looking out for buying ideas, then hoping to add more at the breakout of the 149.950. So mix all that with the US calendar and you've got a recipe for a potential choppy market condition which could last through this whole area. Price will go back and forth before we could see a breakout to either side, maybe to the upside or to the downside. So I'm avoiding heavy exposure until after the labor numbers. So here is a simple setup on the 4 hours time frame that will be guiding my decisions. Now, and finally, on the gold market, which is the headline act for next week, the structure you see here was what we were looking at prior to the beginning of last week. Remember, price was sitting above this major ascending trend line, and we went on to emphasize that we will continue to look out for buying ideas. As at the time I shared my opinion about the gold commodity, price was sitting above the 3,680, just right above this descending trend line I marked out here. And I told you in that video that I will be buying the gold commodity and looking to add more if price breaks out of the 3,708, which was the record high for the upper week. And look at what happened. Gold made a strong run to hit new record highs at the 3,791 area, and this was supported by falling US Treasury yields and a softer US dollar. And on top of that, central banks were still adding to their reserves behind the scenes. But the move wasn't a one-way traffic. We saw what happened here on Tuesday. Profit-taking activities hit hard right here, and what happened? Price was dragged lower into that area around the 3,720 during the midweek. Though bulls came back in with a strong potential to continue. As we can see, buy pressure persists around this area, but by Friday, this resistance here at the 3,781 or 780 area reminded us that buyers are still struggling to clear that ceiling. Now, going into next week, gold's path is going to be tied to the same US job numbers. Weak job data could drag treasury yields down and take the dollar with it, giving gold a chance to smash through that record high at the 3,791 area. If the data from the US comes in stronger than expected, it may result to higher treasury bond yield and a stronger dollar, and gold may slip towards lower, maybe to the 3,680, maybe somewhere around here before maybe we can start considering another buying idea. But at this point, what am I going to be using to navigate this market next week? Well, right here on the 4 hours time frame, if you look at since the beginning of the month, we have an ascending channel, right? This is the resistance line of the channel. And if you go downside, you will see this is the support line of the channel. And we saw what happened last week. Price did break out of the channel. The resistance line came back to retest the structure, and look at what happened. Multiple retests, sellers were unable to break through, and this still gave us signs that buyers may still be in charge. Let's zoom in to see what is going on here. So we can see since price tested that record high, we have the range bound structure between the 3,790 and the 3,732-ish, with my key level sitting at the 3,745. So as it is right now, price remains above the key level and that ascending trend line supporting my bullish ideas. We could see price retrace back into structure, continue buy pressure here, welcome buying ideas, and if price goes ahead to break out retest that's 3,790, it will help us maximize that bullish move. But if price breaks down the trend line and maybe continue selling pressure below the structure, we could see price drop into that 3,680 I talked about earlier. So I'm going to use defined entries on dips or spikes around this particular structure. For me, the plan is simple. Buy dips if the data disappoints, then fade rallies if the data comes in strong. So next week, the jobless claims JOLTS might shape the second half of the week and will set the tone ahead of Friday's trading session. They will give early clues on what NFP numbers is going to be like. So to wrap it up, GBPUSD is currently caught between US job data and dollar flows. And on the other side, the USDJPY feels like a chess match right now, waiting for that breakout move. And gold is holding near the highs, but will live or die by this week's number. So for me, it comes down to patience. I will stay light before midweek, then look to position around clean setup as the data rolls out. NFP is the headline event on Friday, but honestly, JOLTS, ADP, ISM, and jobless claims will already start shaping the story. So the key this week is patience. Don't try to front run the numbers. Let the market reveals its hand. I will be sharing updates in the comments like I always do, so stay plugged in. And until then, trade smart, trade consciously.